It seems hedge funds were all about protecting their past performance.
Yes, because of all the risk that we saw in the fourth quarter. On the S&P 500, I checked, it was down by about 14% in the quarter. The last time there was something even worse, guess what? That was during the financial crisis, down about 22%. So no surprise that hedge funds were pulling out, in particular, the technology stocks. For example, Apple, Amazon, as well as Google, all in the crosshairs for the most part. For example, Soros exited, Apple, Millennium also reduced. Berkshire Hathaway, I'll get to that in a second, but they also reduced there. Amazon, Millennium pulled out there. Google, Appaloosa, Bluecrest, Druckenmiller's fund, Duquesne, Lone Pine, all pulled out as well. So you can see this clear rotation out of technology shares when it came to the hedge funds there. One of the other big names I do want to talk about is Warren Buffett, though, because being the Oracle of Omaha, everyone wants to know what exactly he's doing, where he's putting his money, right? Well, as it turns out, one, I mentioned that he pulled out of Apple, or he reduced his holdings there. We can see the share price react when it came to Apple, as well as to Oracle, as well as to JP Morgan. Why don't we go and pull those up? In an after-hours trade, you can see where those ended. Oracle down 2% nearly, and that's in large part because he pulled out his entire stake out of Oracle to the tune of $2.1 billion. And he cut his stake in Apple 1.1% there. Apple was his biggest holding, though. He did like it, representing 22% of disclosed assets. JP Morgan, you see, rising in after-hours trading, up about 0.1%. That's because he raised his holding there by about 41%, now valued at nearly $5 billion. And looking at the other banks as well, it wasn't just JP Morgan. In terms of what happened with the financials, we saw a big dip down. That was the opportunity from what he saw to buy. Bank of America, PNC Financial, Bank of New York Mellon, all seeing bids higher.
Yeah, Ramy, we mentioned Druckenmiller at the start of that conversation. What did his filings show?
Yeah, when it came to Microsoft and Apple, again, the theme here is tech shares. Microsoft, he decided that he wanted to add to his holdings there, up 31% to nearly $500 million. Alphabet, though, Google, their parent company, he almost exited that entirely, minus 94%. He only holds a stake of about $12 million there. Not so much at all. It makes you wonder why he actually stayed in it to begin with. But one really interesting investment was with Tesla. And with Tesla, you can see that he pushed in technology shares. They're up by about 10%. But they actually bought put options on the company. Usually, if you put options on a company, you'll know that they think that the stock is going to fall. It did fall, but only 8% this year. Last year, it rose by about 26%. After hours trading, I checked with Tesla. It was unchanged. In large part, I'm expecting because people don't know exactly when Stanley Druckenmiller actually went in, so they're not sure if he actually gained or he lost.